Welcome to Behind the Doors, the podcast where we take you behind the scenes of residential real estate investing. I'm your host, Dan Noma Jr., here with my co-host, Marvin Cruz.
We're here to help you unlock the best strategies and practice for investors. Whether you're just starting out or you're a seasoned pro looking to scale your portfolio.
We've spent decades navigating the ever-changing world of real estate, and now we're sharing everything we've learned to help you succeed.
From off-market deals to cash flow management and everything in between, we'll break it down and bring you actionable insights that can make a real difference in your investments.
So get ready to open the door to new opportunities and take your real estate investing to the next level. Let's dive in.
Dan, we are back, my friend.
Man, I love it. We have guests now.
I'm loving this.
So good, man. People are coming to hang out with us.
They're hanging out with us on the couch.
Yeah.
They're hanging out virtual.
Yeah.
You know, last episode, we talked about building a team.
Yep.
And I think this episode is going to further expand that, and which I'm very excited about because it's actually a topic that comes up every onboarding.
Yeah.
We talk about property management.
Yeah.
And I'm so excited to introduce our guest, the founder, the CEO of Home365, Mr. Daniel Shakin. How you doing, sir?
Hi, hello. Excited to be here. Thank you for having me.
Heck
How are you
yeah,
guys?
buddy. Heck yeah.
Awesome, man. We're doing great. What part of the country are you in, Daniel?
Right now, I'm in Vegas. Moved here like a year and a half ago from the Bay Area, where we started the entire thing. But now our operational hub is in Vegas, and I'm splitting my time now between here and our R&D center in Tel Aviv, in Israel.
Oh wow.
Oh, that's awesome.
That's cool. That's awesome. How'd you even get into property management?
That's a long answer to a simple question.
I got one too, so I'll tell you my story when you tell me yours. Yeah.
So I'll tell you what, look, I was not born into real estate investing. I have a background in technology. We're a tech company by our DNA.
Yeah.
And I approached this industry from a data perspective, I would say. I was looking for a very, call it technophobic or not developed market. And real estate is unfortunately very, very traditional. I was looking for a market where there was a lot of pain, okay? And the real estate investing, especially the property management side of it, has its sentiment with clients, with real estate investors. So for me, it was a great opportunity. Recurring revenues, rents, huge market. And I actually dived into this thing from that perspective. How do we make a change in something that's prone for change?
Yeah.
Right.
That's funny.
So that's the thing. And eventually, it's my 9th year running this company, and we've learned quite a lot.
Wow.
Yeah.
How many total doors does Home365 manage on a national level?
We're in 9 states. We are many thousands.
Yeah.
We kind of keep the number for us, but many thousands of those.
Right. Yeah, it's a lot. I got into, I no longer have it, but I was in a property management business myself. And I got into it because I'd refer people, property managers, and they would have such a bad experience that I knew if I didn't fix it, that I wouldn't be able to sell them any more houses, and so my niche is in selling houses, but we got into property management, and then I learned a ton. And I think what I learned most from it is, that wasn't for me. It wasn't my favorite. So I'm interested to hear, what attracted you to it from a technology level, because, I recently just came back from a conference with somebody that was attacking, property management from a different angle. They're not even a property manager, but they also saw that it was an opportunity with more technology that they could help a lot of real estate investors. So I'm excited to get into that and understand a little bit about you guys. So as Marvin started, like when we think about like an investor, we work with all types of investors. Our listeners range from, seasoned vets to, beginners. Property management is like you said, a big piece of the puzzle, right? And I think a lot of people that get into real estate investing, they think that they're going to manage their own properties, and then they don't, right?
Yep. And good luck.
It's just not worth it. Right. It is. I always say to real estate investors, I'm like, hand the keys to a professional and let them handle it. So excited to hear how, your perspective on it. So what exactly does the technology do? Like, how do you guys work with real estate investors?
Right. So look, we've read in this Rich Dad, Poor Dad book when we were young, that real estate investing is passive. Yeah. It's everything but passive. Okay. If you are more experienced, you know how much it requires to run a property, a rental business, call it. Okay. Yeah. We are focusing on single family rentals as our primary market. And this is, I think, in a way, the toughest market you could imagine for automation. Because every house is different. Every tenant is different. Every property owner is a different personality, different thinking, different strategy, different regulation in different locations, scatter site. Everything is very different. How do you automate everything that is so different? If you think about great solutions that manage to disrupt offline worlds, call it Uber, DoorDash, things like that. Those companies tackled a very simple type of project. Okay, I need to get from point A to point B now. And everything is the same pretty much, right? Only the mileage is different.
Yeah.
Okay, with property management, it's all so much more complicated. Every maintenance project is different by nature from one another. Every property is built in different location, different size, different age, different materials. Everything is different. Cost of labor is different. It's so complicated. And there is no way, because of those nuances, to manage a large portfolio without actually relying heavily on a unique IP, which should be a technology. Oh. And it should be in an in-house technology because you need to control every piece of it. So we are building an automated property manager, call it, practically to replace the human property manager as we know him. Wow. Okay, so we are trying to automate every possible event that we are familiar with: vacancies, evictions, maintenance requests, all through automation, and make it super autonomous as much as possible. We now operate all our 9 states from one single location.
Wow.
Totally relying on, we have no feet on street, no people that are company employees running, doing local operations for us. We've taken a completely different approach. We are developing a solid technology around a marketplace, abilities to find the right vendors, dispatch them to the right projects, control the quality of their operations, and then be able to feedback all that to property owners. And as I listened to your last episode, 96% are actually mom and pop investors, which is damn true. Half of them, by the way, are not Americans. I don't know if you mentioned that, but a lot of them are not even living in the United States.
Right.
So those people are very remote. And being able to project them the reality in real time with every piece of what's happening right now, every event in real time, that's part of the challenge. Yeah. So automation allows us the ability to scale actually faster to more markets with less errors and being more efficient than I would say a traditional property management would be. Yeah. Property manager would be.
Yeah.
The second thing, which is a bit unique or quite a bit unique, we decided that there is a problem with the business model today for property managers. If we're talking from a real estate investor standpoint, if I'm owning a $1,300 rental property, I'm paying $80 for property manager to oversee my $500,000 home or $250,000 home. It doesn't make sense if you think about it. I pay $80, which is 2 or 3 hours of Uber driver, to someone to oversee my wealth of $500,000 or $1 million. How much management do I want or do I think I can get for $80 a month?
Yeah, not much.
Okay, so I think that the business model is very broken right now in the market, And that what creates, in a way, a very bad sentiment with property management companies who are not trying to do anything bad, but they cannot staff enough people to deal with all the problems and nuances that are happening during the,
It's an
call
interesting
it
point.
the time of holding of the real estate. So we came up with a different business model. We actually underwrite the profit line for property owners. We are projecting from the data standpoint what might be the events around people, like vacancy trends, length of vacancies, delinquency trends for a specific demography that's going to occupy your unit. And the same is happening for maintenance and repairs. So we are able today to predict pretty precisely what's the probability for your garage door not to open for every 1,000 doors in a certain market, or water heaters not to function. And we bundle everything into like one flat rate, which basically protects your profit line. So say you are a real estate investor, we would underwrite your property. And from that point on, your top line revenue is constantly the same. Doesn't matter if the property sits vacant, we are paying your rent instead. Or if the property is delinquent, we are paying your rent instead. And if there are any repairs wear and tear related, we would be covering those as well. So from your perspective, you are truly passive. You are truly, it's very predictable for you, mainly because we understand that mom and pop investors have their day job. They are not operating real estate. Okay? They are buying peace of mind. They are buying predictability. That's a college fund for their kids. That's a store of value for their retirement. They don't want to deal with property managers. They don't want to hear horror stories about tenants, and they don't want any friction with that thing.
Wow.
So our business model kind of sets them, apart from the business that they are owning, which is a rental property. And we are able to profit also from the actuary model, if you think about it, not just from property management, which allows us to provide much more solid, I would say, attention to the unit, coupled with technology. That what allows us to be, I guess, different in this market.
Yeah. And it sounds like your interests are more aligned with the investor too, right? Because you have a vested interest now on the success of the performance of the property, right? Which I think is amazing. That's awesome.
Look, Dan, if it takes us time to find a new tenant, or we are slow to do something, we are paying for that out of our pocket. So this is where we created a true sense of partnerships with our investors. But what we learned over times, by the way, that we are not willing to do that for every property out there.
Yeah.
Okay?
Yeah.
Because this plan wouldn't take C- class property and make it A class.
Yeah. Right. Yeah, you got to be pretty picky about which assets that you're gonna manage, because you're technically renting it, right? I mean, you guys are you're backstopping the rent in a lot of cases. Yeah.
I mean, we are full A to Z property manager, and we would take and do basically everything that a regular or traditional property manager would do.
Yeah.
But we have a skin in the game. So if we are slow, if we are not efficient, we are paying for that inefficiency. And this is where we are partnering basically with our owners.
Yeah.
We're not seeing any upside from their appreciations or anything of that, but we are mainly profiting from the management, the software license, and the profit protection component of it.
Yeah.
That's awesome. That's awesome. Yeah, it sounds like you are the true definition of property management, not just the tenant management, but this is true property management. That is awesome. I also noticed that you also post homes for rent on your website as well. Can you talk a little bit about that?
Yeah, I mean, every property that we manage eventually goes online and marketed to tenants. So we use different syndications, and part of that is our website.
Yeah.
But yeah, I mean, we are from the owner perspective, we are a property management company, but we are able to operate that at a bigger scale with less people and much more efficiency, alongside this, predictability for the owners. Like, I can tell you that not a lot of property management companies understand that they are managing people's money, not properties.
Yeah.
We're not, I mean, we are lucky to manage people's wealth. We are a fund manager in a way, if you think about it, okay? If we are not able to provide double-digit IRR to our investors, they would just sell their properties and invest in S&P or buy Bitcoin or whatever, you know,
Right.
which is not a bad idea, by the way, but still,
Yeah.
I mean, still, we need to think money. We need to think returns, not just managing properties. I'm actually not in love with this term, property management, because we're not managing properties, we're managing money
Right.
in a format of a drywall, okay? But it's still money.
Yeah. Yeah, it's like gold.
cool.
It's a gold bar sitting out there, you know, and someone needs to maintain it and manage it.
Yeah.
That's pretty cool. That's awesome. So how did you pick the markets that you operate in? Is that just, you know, pure just how you guys grew into those markets out of need? Or is there something more strategic about the markets that you guys are in?
So look, eventually we started in Vegas. That was our first location. I founded the company in the Silicon Valley. And we started by acquiring a book of business of a traditional management company, first 200 and something doors. And we turned them to be our, call it guinea pigs in a way, while we were building the software and the solution. And from that point on, we kind of grew by organically quite a bit. We're adding around 100 homes organically every month. I mean, people go on our website, provide their address, answering a couple of questions, and getting our quotes online. They can book online and start self-onboarding and manage properties as of tomorrow.
Wow.
That's our process. They don't need to talk to anyone. It's all self. Okay. And the quotes they're getting basically are the two plans: the traditional plan, where there is no underwriting and no profit protection, and the one with. But our second go-to-market strategy is acquiring those traditional books of business, property management companies. And we started in the south of the United States, Atlanta, Phoenix. But then eventually, since we're funded by venture capital world, there were a lot of question marks from those smart people. How's your underwriting working in tough areas, you know, with tougher demographies or older structures and buildings?
Yeah.
So we decided to expand to Detroit and Chicago and central Pennsylvania, where houses were built in the 1700s. Okay, the first houses of the U.S. And partially that was to train our underwriting algorithms. And this is where we learned quite a bit. So at the beginning, it was pretty much opportunistic and driven by technology. But now we are focused on the bigger markets, you know, where with decent rents, with quite a bit of population there. But we are opportunistic.
Yeah.
If there is a good portfolio, we just launch it.
I love this because I can't tell you guys how many times I talk to investors, especially the new investors, first time. Who's going to manage this asset for you? And they always go, myself. And I say, why?
Right.
Well, because I want to save cost.
Yeah.
And that's like the opposite way of you should be thinking about it.
Right.
Like, this is actually going to help you generate costs. So I'm glad you said that. What's your message to new investors? First time, they only have one property. What's your message to those?
So look, I mean, most of our investors today, like the average amount of units our investors are holding, I'm talking about thousands of investors, 1.8 units. Okay.
There you go.
So we're talking about that mom and pop long tail of people from all over the world, all the way from China, Middle East, Europe, South America, and quite a bit of United States, obviously, but mostly remote. Look, I mean, we are selling peace of mind. We are selling predictability. We know that you are a lawyer, you are a dentist, you are, you know, you have your life. Park your property with us, you know, invest and rest. Forget about this thing. It shouldn't bother you. The only thing you should hear is just the cha-ching of your income coming in every month, okay? Other than that, I'm not going to tell you stories. I'm not going to ask you to contribute a couple dollars to unclog whatever sink or to deal with whatever toilet. It should be passive. It should be super transparent. Like the best experience I can get from you, that you forget the password to log into your dashboard, to your portal. Yeah. Okay? If you forget this thing and you don't go there, we made it. Okay.
Done your job. Yeah, that's kind of
Exactly.
how we think about our business too, is, we very much want our real estate investors to, do this kind of the way it was designed. It was really designed to create passive wealth or passive income for people. And I think too many people get caught up into like, all right, I gotta buy in this specific area because of this, this, and this. And they're trying to outsmart the process.
Right. Right.
When we go to them and we're just like, look, like the question is, do you want the best investment or do you want to buy in that neighborhood? Those are two different things,
exactly.
and if the answer is you want the best investment, then we'll help you with that.
Yeah.
If you just want to be in that neighborhood, okay, cool. Like we'll help you find it, but just know that that's not the logic that we would use. Right.
Yeah.
And so, I mean, truly, like with the marriage of our two companies, you could just say, okay, I've got X amount of dollars to invest and just go back to work and not have to worry about it anymore. Right. That's the true reality of where the technology is taking us. So
awesome.
Amazing.
But you asked a good question at the beginning, like, about the first time investors. And my first comment when we started this conversation was, look, they are greedy enough to hire an expert to oversee their wealth. They've invested so much money, okay? All their life savings, maybe. The first timers I'm talking about.
Yep.
Okay? And then they're looking for the cheapest they can find, 6%, 4%, whatever, 5%, $70 or $80 to oversee $500,000 value of their property. How is that logical?
Yeah, right. Well said.
I mean, if I were managing your money, like a fund, okay, buying, selling stocks, whatever, you would be paying quite a bit.
Yeah.
Right.
Yeah, I used to say to my team, I would say, when they would go, oh, like people would grind them on their fee or their commission. I would say to them, the analogy I would use with sellers, I would say, you don't actually ever want the cheapest buffet in Las Vegas. It's like, I've always found it funny when you drive by in Las Vegas, those older casinos have, like, they've got the $3.99 buffet, stuff like that. I don't want that. Like, no, I don't. I just can't imagine that, like if I'm going to go out for a buffet, I want a buffet.
Right.
Like I want the right buffet. I don't want to get sick by eating some $3.99 buffet, like that doesn't excite me. So I'm with you. I don't believe that in our business that, I think you get what you pay for. And, if you're going to grind and try to get the cheapest house. Like we just had a contractor we were in conversation with, and our conversation there was around like, you buy the cheapest house. That's not always the best strategy, right? It's like that cheap house could cost you 2 times more later on because it's got, you got to replace the wiring and the plumbing. And the next thing you know, that cheap house is not cheap anymore, and so it's buying the right house.
That's right.
Hiring the right company to help you acquire it. And then partnering with the right property management company that has your best interest. And what better way to do that if your interests are aligned, right? If your interests are aligned in the success of the investment, you're winning. Like that's the ultimate. I don't know where you go from there, right? Isn't that like, that's the best you're going to get, I would think.
I agree with you. I agree with you. This is all about the right team, the right tools, and the right mindset, right? And the shared interest at the same time. And that's what I love about it.
Yeah.
Look. And another problem is that those guys are looking at their Excels that they've been taught. I don't know, taking whatever course, but those are not always reflecting the reality.
Yeah.
Especially if you are choosing the more risky type of property, lower class. You attract specific types of tenants, and then all the crazy stories are happening.
Yeah.
Okay. We can write a book. I think our exit would be from the book we can write about various cases with tenants and houses. So just to support what you're saying, Dan, I mean, it's not always that the cheaper is more profitable at the end.
Yeah. Not in this industry. It just
depends on your strategy.
Yeah.
And it depends on who you are and how much you want to invest of your time and everyone else's time in trying to generate some profit. And of course, depreciation is different. And eventually the IRR numbers are a blend of appreciation and cash flow And you have to find the fine line as an investor between those two strategies, because you can go with more cash flowing property, which will not appreciate.
Right.
And actually would depreciate with inflation quite a bit.
Right.
Right?
Yeah.
Because inflation is like what, 10% a year, really?
Right.
It's like a hidden tax.
Yeah.
So if you are not appreciating just fast, 10% IRR, cash flow and depreciation, you are actually going backwards.
Yeah, absolutely.
That's wild. How are you guys dealing with maintenance issues? You know, that 24-hour or, you know, that midnight phone call from the tenant and their sink blew up. You know, how do you guys deal with that, seeing as you don't have any boots on the ground?
You mean like for maintenance issues, for emergencies?
Yeah.
So look, one of the solutions we have, every tenant has an app where they basically, in a very intuitive way, launch it in a video mode and shoot the problem and speak naturally. The way we just communicate right now. We analyze the video, we break the video. I mean, the system breaks the video into thousands of images, identifies objects in those images, and correlates with every keyword you have spoken about. Wow. And it identifies with very high precision of over 99.9% what the problem is really there. Okay? It might be flooding in the basement, and it's not a problem with irrigation system in the garden. It's kind of hard to do it automatically.
Right.
But our system is able to understand the project, which is shot on video. And then this video is streamed almost live to our vendors in our marketplace, the one specific vendor who is chosen for this specific project. Okay? And what happens then, they got a notification, and actually from the second that this vendor responds through the app, they and the tenants are onboarded through that app and can collaborate, chat, video conference, schedule visits. So, you know, many times we're coming back from weekend and there were like 50, 60 projects with no human touch done during the weekend. All communications between tenants and vendors through our applications. And since we don't need the owners to approve the projects, because we are the ones who approve them, actually that's also done by our machine learning algorithm. So whenever we get a bid from the vendor, if it is within our statistics, within our frameworks, the system basically gives them thumb up, go ahead and do it while they're still on site. They get paid through the app and withdraw the money through the app like Uber drivers. No invoicing, no nothing. And it's like full end-to-end autonomous, call it, process where things are taken care of. In many cases with emergencies, it's just enough for a video conference between the pro and the tenant, and they can shut down the certain water or do something, you know, by themselves.
Wow. That's
so cool. We also pay for that. Our vendors are getting paid for that consultations.
That's amazing.
That's awesome.
All this technology is coming out of Tel Aviv, by the way, right? Is all your engineers are in Tel Aviv?
Yeah, our R&D center is in Tel Aviv, but we have product folks here in the market in US.
That's awesome.
Amazing.
And everyone in our operations, I would say, side of the company are actually always thinking, how do we automate this case that we just dealt with, and trying to think, how do we productize it? How do we build the platform or this specific case into the platform?
Wow.
So it requires like operating people to be like semi-product people.
Yeah. Everybody's thinking about solving the problem. That's like the perfect storm for a founder. I love that. That's what a cool concept.
I mean, it's crazy hard. If I knew that industry would be so hard, I don't know if I would start it. I mean, seriously. It's a hell of a journey.
Is that what happened to all your hair?
Yep.
Yeah.
You say yep.
Yeah.
Sore subject there.
Yeah, that's what made it happen.
Good, buddy.
Man, it's tough. It's tough. And you know what? Let's layer up on top of everything the regulators.
Yeah.
We have a ton of regulation here, like rental licenses by different cities with different. I mean, I don't even know if this is a constitutional thing to do, like cities requiring rental licenses. Seriously. I mean, it's like another tax on real estate investors.
Yeah. Yeah, it's something that everybody's dealing with. It's a weird deal. I don't know for sure either. But but
Actually,
certainly complicated, and they're doing it, right? So it's got to have some legs, but you
it's
can't.
just another way to extract money from real estate investors.
Yeah.
Okay. And eventually, who is paying for all that? Guess what? Guess who? I mean, tenants.
Yeah.
Tenants.
Yeah. All that stuff gets passed on, and that's why rents are high. So, and then they complain about high rents, you know,
This is why.
it's a wild deal. I saw on your website too, we also have a lot of real estate agents as as listeners on our product too, or our podcast. You guys have a cool referral program for real estate agents, don't you?
Yep.
Yeah. How does that work?
So look, we have two types of, I would say, referral programs. The first one is that, look, since we manage thousands of homes and few thousand of owners, there's always like real estate transactions happening. We don't do them, we refer them to our partners, okay? And we also want them to refer management business to us as well, okay? So that's like one thing, buying and selling real estate. We usually try to retain the same house we already manage, just switch ownership. And we are pretty successful in doing that, but not always. The second thing is our vacancy operations. It's again, we operate with a marketplace mindset. Think of us as, I want to use this cliche of Uberifying or whatever, but that's what we actually have. We have gig economy workers doing for us a lot of low-key kind of errands, you know, placing lock boxes, putting notices on doors, checking occupancies. So we are able to recruit them at scale. And it's happening quite a lot, where an Uber driver in between the rides would get a push notification to their app and do something for us and then continue driving.
Yeah.
Okay.
That's cool.
So that happens a lot. And the real estate agents, from our perspective, are part of that marketplace where we need to lease a property. So a vacant property would go to the right agent, and they would do everything A to Z. Post the property, you know, market the property, do the showings, walk-ins and all that. And eventually we want a contract back signed. So we outsource all that.
Wow.
But again, we know who we partner with. We have like tools to collaborate and measure everything. And those agents that are providing a good service, fast renting, you know, and do whatever they are compensated.
Yeah.
Sometimes anywhere between half to 1 month of rent.
Wow.
Yep. That's
awesome.
That's what we pay for them.
That's awesome. It's a whole nother income stream, Marv. We get into referring business to Home365. Yeah.
Yeah.
All right, we got one more question for you. Well, we got a couple. Well, this one we've been asking kind of all of our guests. We'll have a little fun. Is we've just been asking, you know, give us the craziest thing that you have seen in your years now of property management. You know, whether that's like a wild tenant story you got for us, crazy landlord story for us,
or a story,
you know, something that, you know, might blow our audience's mind that you deal with. It could be on a regular basis that, you know, everybody thinks is normal. So what was the craziest thing? Like we had someone in here recently that told us they found a dead body in one of their properties, and then there was a murder. We heard about that. So what do you got for us? You must have something.
I mean, dead bodies, it's for newbies. I'm just
for newbies.
You know, shots at properties, that's for also for newbies. Look, I mean, there's quite a bit of scamming happening around. Less of a sexy stories, you know, about, you know, funny things. But we had a tenant, basically, who lived in a property here in Vegas for 6 months, paid high rent, like $4,000 for a decent property here a month, and eventually at a certain point stopped paying rent. It took us a while to evict this person. And eventually what they did, they charged back, or they claimed that they were charged rent fraudulently or something like that. Basically, they disputed the rent payments that they've done before with their bank. Okay?
Yeah.
And the bank, without a lot of questions, basically pulled back $40,000, out of the rent account or out of the owner account. And that story, we've been seeing stories like that a couple times. There are identity thefts that are happening, sometimes very hard to spot, especially during COVID, where you had to do quite a lot of remote move-ins and remote move-outs. Those were very problematic issues.
Wow.
We're still chasing this person, and the fact that they stole identity of someone else, actually of a deceased father, not less than that.
Wow. People, man.
So
people.
It's the same. It's the same family name, same second name, same thing.
Yeah. Would you want to
manage that by yourself?
No.
Oh man, that's
taking a whole
crazy.
team with me.
Yeah,
and I'm a big boy. I'm not going by myself.
The team. No, that's why people say I'm going to manage it myself. I go,
nope.
I don't think you should. Yeah. I really don't think you should.
It's a lot that comes with it.
Bring them in. Bring in the property managers.
Look, I think, you know what? Even better story. We get a call from, like a lead comes in from Google search, okay? Japanese investors with 140 units from Japan. By the way, Japan, super interesting story. They get some tax benefits in Japan for buying properties anywhere in the world which are above 25 years old. So they are actually looking for old structures.
Yep.
Okay?
Yeah.
And there's like a property which they want to move to a new property manager, and they are sending us to take a look. By chance, I was at that time in Vegas. We're taking our office manager. We're driving there, not the best part of Vegas, but still. And it was unbelievable. People living in crawl spaces. All the properties are full of squatters, needles everywhere. Hell. I mean, seriously, unbelievable hell. We had to hire a security team 24/7 for like 2 months. They formed the headquarters on one of those apartments. It was like a multifamily with 2 or 3 stories, if I remember. And it took us a while to stabilize this one. But it was huge negligence by everyone previously involved. But it was unbelievable how a place like that can get so bad within no time, pretty much, by attracting squatters. And the sites I've seen here, I've never seen anywhere in the world.
Yeah, you don't want to do that.
Oh, that's awful. That's awful. Well, Daniel, I'm sure you and I could share war stories for hours. So, but how do our listeners find you? How would they find Home365 and work with your team? What's the best way for our listeners to get in touch with you guys?
Best way to go to our website, home365.co. If they are interested in property management, just start the process there. It's a nice button there, get a quote. With live chat with our inside sales team if they need that. And we'll be happy to help.
Awesome.
No, that's awesome.
That's the best way.
Yeah.
We appreciate you so much, sir. Thank you for joining us.
Yeah.
It was a pleasure. I actually didn't get the chance to ask you questions, but next time you'll get on our podcast.
We will have you back on for sure.
Yeah, we'll bring you back on.
Maybe we'll come to you in Vegas now that you're in Vegas.
Yeah.
Perfect.
Yeah.
Amazing.
All right.
Yes, sir.
My pleasure, guys. Thank you so much.
All right. Thank you, Dave.
Thank you. All right. See ya.
Thank you.
Bye-bye.
Thanks for tuning in to another episode of Behind the Doors. We hope you found today's insights valuable for your real estate investing journey.
Remember, real estate success doesn't happen overnight, but with the right tools and strategies, you can build long-term wealth and create passive income.
If you enjoyed the show, be sure to subscribe, leave us a review, and share it with others who are passionate about real estate investing.
Don't forget to follow us on social media for more tips and exclusive content.
Until next time, keep unlocking new opportunities, and we'll see you on the next episode of Behind the Doors.